The number one question I'm getting from basically last Thursday to today is, Dan, why have mortgage rates went up even though the Federal Reserve cut rates? Because I sat on the sideline once again, just hoping that the Federal Reserve would cut rates and not this time that where mortgage rates would go back up. So why are mortgage rates going up? So if you're watching this video and that's your question, my goal today is to explain to you guys what's going on with those and the whys behind it. But the reason why mortgage rates went up and the Federal Reserve cut rates is because the Federal Reserve doesn't control mortgage rates. But when you're focusing in on mortgage rates, it's a whole different avenue because it's controlled by bonds. So what really affects mortgage rates? Inflation, the jobs market, a lot of the things that the Federal Reserve monitors. But the one piece of the puzzle that they really don't pay that much attention to is the deficit. And yes, they do, but the long end of the bond pays the most attention to the deficit and a lot of fiscal policies affecting that. So the biggest thing right now that we're facing is tariffs. So what we have now is more of a risk premium in rates. So now you understand, even though more short-term rates might go down, a lot of the fiscal policies that we have that control the back end of the bond market is still uncertain. So again, folks, just because the Federal Reserve is cutting rates is telling us inflation might be better than expected and employment might be better than expected. But the long end of the bond has much, much more intact to it, especially our national deficit. And then we might even have a shutdown next week, folks. So that is also another catalyst that might add another piece of risk premium into these rates.